right, so this is right after the FOMC press conference, and this is the long trigger in the Nasdaq. We already had a confirmation on a lower time frame. I just really wanted to be slightly closer to this level. The point is, this level tends to pull the price up once price is close to it. So there is a confirmation. I can take a long now, but I just want to wait a little more, just in case here. They look good. They look good. Okay, so the stop would be below this pivot, and I'll be looking to take a long. Well, I am taking a long toward this trigger at 910. Great volatility with this FOMC. Just got to be on the right side. So these levels keep you on the right side. So again, this is not for everyone. This is a large stop, no question, all the way here at around 819. All right, so here we go. Now you can see how this level is going to start pulling the price. Watch this. There we go. Come on. There we go. I'm done. I am finished. Look at that. Right to the level. It is a great way to trade. You look at the buy-sell levels, you figure out where price is in relation to these levels, and then we show a way how you can trade on a much lower time frame, not on a 10-minute time frame. On a much lower time frame, we show you how you can take advantage of this idea that these levels pull the price up when they are underneath. Even before the FOMC, you can see, right? You can see this pull, and as prices gets closer, it accelerates toward these levels. And we see this every day, every single day. Here it is. Price pretty much here touched this trigger. It should go, by the way, beyond this trigger. It's just that it did it already earlier. This was a nice move. Then it came underneath, turns around. On a smaller time frame, you confirm the trade long. You only are looking for longs under these conditions. Yes, I'm sure there was a great short trade on the way down. We are not concerned with that. We are looking for longs toward the buy level, and here it is. All right, so today is not the last day of the month, it's the 22nd, but I will be applying for a payout soon. So in case I don't get to make another video this month, just wanted to show you the conclusion of these two accounts I've been showing throughout this month. So I actually messed up a bit. This trade was supposed to be part of the $50,000 account, not the $150,000 account. The difference is the $50,000 account takes any trade that has to do with these levels, while the 150 takes only the actual alerts. And today, just with all the excitement of the FOMC, I messed up somewhat. So it was not supposed to be this much in the 150,000. You can tell again, while the $50,000 account did really well, the 150,000, while definitely positive, did not do quite as well. And that's because it only takes the actual alerts for $100, one contract, and one alert per instrument per day. You can see when you're trading and you have these levels in front of you, trading just becomes much clearer. Is every trade a winning trade? Of course not. But the odds, the probability is in your favor when you are trading with these levels in front of you. And of course, while I love the NASDAQ is not the only instrument that obviously I post, because I post for 7 instruments. I do not personally trade all 7 for the most part, but we do have members that prefer some instruments, so I try to make everyone happy, and I post a 7. We do have some traders who trade the 6E. By the way, 6E is an interesting instrument. But you can tell, so I think when I took the trade, I was somewhere here, right, when I confirmed a long trade. So we don't simply go long just because price is close to the trigger. We are looking for long trades, and we have a certain way on a lower time frame, because this is a 10-minute chart, we have a certain way of confirming long and short trades depending where price is in relation to these alerts. So this is the NASDAQ. Maybe let's take a look at oil. So oil was a long. Let me show you. Last night posted 70 and 11 cents. So right around the pit session open, and you see again this concept I was talking about so many times. As price is approaching this trigger long, it accelerates. You see that here. Nice acceleration toward this trigger long, and our members know how to get long on a smaller time frame toward this trigger. Price moves again and again, comes back to it. So on most days, you will have more than just one opportunity to get long. And make no mistake, under these conditions, we are only looking for long trades. So here it is again, comes back, here it is again, doesn't quite make it here, comes close, but doesn't quite make it, and again over here. But definitely throughout the day, so throughout today in oil, you only looked for long trades. And once you are able to, let's say, discriminate between long and shorts, where you say, well, here is a long trigger, it is definitely prices, even here, prices closer to the long trigger than it is to the short trigger. I am definitely interested in being long. And you stay long, and you had numerous opportunities to get long in oil. So gold is another example where a trader would only look for long trades, not interested in shorts at all. Were there some short trades that could have worked out? Of course, but you kind of learn to only look. Everything becomes much clearer when you are able to look at a chart and say, I am only interested in longs. Not here when it's obvious, but even here. Even here, you are looking for longs because the long trigger is right there. It is close. And you know that 8 out of 10 times, I mean, that's very high probability. 8 out of 10 times, price is going to move toward this trigger long and go beyond it, for sure go beyond it, but at least come in and touch it. And you see that many times today in gold. So I know not too many people trade the 6E, but I just want to share this with you because I have been watching the 6E. Normally I don't trade it myself, but it is an interesting market. So last night, the alert was to buy at 1.0, 83.70. Now 83.70 triggers around 5 a.m. Eastern. Nice moves, comes back again. See this? A move comes back, a move comes back, a move comes back. So just to show you how important these levels are. And again, you see this acceleration toward the level all the way from here. So I mean, a trader could be long even before price touches the trigger from here. And then take a look at this move. This is ridiculous. I don't even know dollar-wise how much this is. But the high was at 97, from 83.70 to 97. You do the math. I have a headache, can't do the math right now, but Not saying this happens every day, but I am saying that there are multiple opportunities. Look at all the opportunities you had to get long. The market, for the most part, will give it to you because of the importance of these levels. Okay, well, I hope you enjoyed this video. Please leave a like, leave a comment. This really helps. Let me know what you want to see in future videos. Of course, if you want to join us, my email is in the description along with the website algodaytrader.net. Get in touch. Let me know.